Now, this is one of the previous examination report. So I'm highlighting few points that we need to work on in the remaining time. As you all know that what is the style of the question paper. So first of all, the marking scheme included 4 professional marks in question number 1 that you people already know. And that requires you, first of all, a good presentation, good communication skills, clear and easy to follow explanation, and calculation in an organized and a well-planned answer. So 1 mark for each. It means a student can easily get these marks. What you have to do is to present your answer in a structured way, proper calculation, proper explanation. That would be a bonus marks. Now, journal approach, what examiner want? First of all, know your stuff. Know your stuff. You should know, first of all, that, wait 1 minute, let me just share the link to one of the student. Now, the successful candidates are able to demonstrate a good level of accurate knowledge of UK tax system. Now, that is very important that you should know the UK tax system. Each and everything about income tax, corporation tax, IHT, CGT, all stuff. Similarly, the basics that is incorporated into the syllabus from the basic TX syllabus, that is the previous knowledge, which is also very important to understand, right? So first thing is your tax system. Second thing is that you have to practice from the previous past exam so that you can get an idea that how the question has been tested, how the answer has been written, how to get the easy marks, right? There is one very important point written here. The student should focus on how to spot the clues or triggers in the question. So there is always few points given in the question that you have to highlight, and you have to base your answer on these triggers and clues. Okay. And it's very important in the longer scenario based question, that is in section A, question number 1, especially in question number 2, that lots of information has been there. So you have to identify the relevant points. While reading the question, it is very important while reading the question that you identify and highlight the important point, because it's very difficult to manage such a lengthy question. So if you highlight the key points while reading the question, that will improve the writing and the important point. Okay. Second thing is that always see requirement carefully, that whether it's a calculation, okay, whether it's explanation, whether calculation is also needed with explanation. So requirements you should know. What has been asked, what is not needed. For example, in the first session, when I was solving the question of losses, it was written that not to discuss the carry forward losses. So if a student is writing about carry forward losses, it will not be worth getting marks. Okay. So you have to check, calculate, explain, advise. Okay. Marks are also important, so that you need to know, should I write brief? Should I need to explain? As far as exemption is concerned, sometimes examiner says that discuss the relief exemption as well. So the requirement is very important. Similarly, the number of marks. If, for example, there is some discussion and that is worth only 3 marks. So it means that you just have to write few lines, not the whole page or a lengthy answer. Okay. Do not provide journal explanation or long introduction. You don't need to provide journal explanation. Your explanation should be as per the requirement or scenario of the question, right? If you are just asked to calculate, there is no need to explain, or explanation is not needed. Similarly, when you want to write, think before you write. Okay, what is important, just write it down and then apply your knowledge to the fact by reference to the requirement. That is very important. Think before you start and manage your time. You know that in the given time, it's very difficult to manage professional papers. So you need to focus on the specific requirement, specific answer rather than the lengthy answer. Okay. Before you start writing, just think about the issues, identify all of the points you intend to address, any strategy you intend to adopt to satisfy the requirement. So this is the journal, I mean, a kind of information that if you follow, that will help to at least improve yourself. You can use this document, very useful, very effective, right? Now, let's focus on one of the thing that examiner has discussed here is time management was very poor. And this is a usual problem with many of students, that they spend unnecessary time on completion of the question. It is always easy to start the question and get easy marks rather than complete the question. So for example, if you have started your paper from section B and say suppose in question number 4, there are 3 requirements. You know 2 requirements very well, but you have not good idea about the requirement number 3. So instead of wasting time on requirement number 3, just move to another question, that is question number 3, and try to solve 1 or 2 exam requirement of question number 3 rather than finishing the question number 4. Okay. So time management is key. If you do not follow the time management, you will not able to complete that 100% paper. So these are a few information. Now let's move to our question for today, and that is a corporation tax question in which there are few issues related to value added tax, some group stuff, CGT, some branding issues, and some like the permanent establishment of the company. Very good question, very effective question. And my advice to all of you, instead of practicing more question, select few questions and try to revise that question. Try to practice that question repeatedly, like 2 times or 3 times or 4 times. That will help you in memorizing the text rule, because in each question there are so many rules. If you practice each question twice or thrice, that will help you to understand a particular issue, and if that would be repeated in the exam, that will be a booster for you to pass the exam. In 2 or 3 days time, I will give you few selected questions from each areas, like from income tax, few questions from corporation, that I think these are the topics that are usually being asked by the examiner. So what you have to do in the last few days, just to focus on those questions and try to memorize the rules given in that question. Okay, is that fine? Now let's see this question. So first of all, what is our approach? We always try to read the information. This is a typical section B type question. So the requirement is not that clear. Rather, there are three parts. First part is about sale of shares, which is worth 4 marks. Second about is Q limited. Third is R limited, right? So we have to see the detailed requirement, which is here, detailed requirement. Please carry out the following work. What do we have to do? First of all, in terms of the first requirement, which is worth 4 marks, there is a sale of 4,000 shares in P Limited on 1st May 2022. So what do you have to do? Calculate the capital gain tax. Assuming all possible reliefs will be claimed. So it's basically a 4 marks calculation, right? M is resident in UK. You should assume that the question name is Mita. You should assume she will be a higher rate taxpayer. Now, as I told you, there are clues, there are triggers. So if you need to calculate capital gain tax liability, you must know whether the tax person is a basic rate taxpayer and a higher rate taxpayer. And you know that the rates are 10%, 18% and above, then the rates are different. So you should assume that she will be a higher rate taxpayer in 2023, and CGT annual exemption will not be available to her. Now, it means this particular CGT is about an individual one, right? Because annual exemption is not available for corporation. Annual exemption is only available for an individual who is dealing with CGT, right? Now, with the perspective of this particular part, let me search the relevant information in the question. So you can see your manager has received a letter from Mita, the owner and managing director of P Limited, a client of your firm. Extract from that letter together with the extracts from an email from your manager required the work to do are set out below. So this is an extract from the letter which is dated 2nd March 2022. Now this is related with the first information. Sale of 4,000 ordinary shares in P Limited. Now, the basic CGT format you should know that you need selling price, you need cost, you need like any other cost which is capital in nature, okay? And what kind of relief you can get, you have to identify. For an individual, there are how many reliefs? Can anyone identify? How many relief available for individual? And especially, what kind of relief available when you sell shares? Because relief is very important topic. And usually, relief is given in the exam paper. So you should clearly know what kind of reliefs are available, what are the conditions of rollover relief, what are the condition of gift relief, what is PRR, what is letting relief, and what is BADR, and what is the investor relief. All the conditions, all the dates, each and everything should be clear. Okay. So let's see. On 1st May 2022, I am going to sell 4,000 shares in P Limited to my brother. Now listen, that might be a gift as well, if that is at below the market price, okay? Or that might be a normal sale of shares. So I note from the work you have already done that the current market value of shares is 2,60,000. However, because I'm keen to get Ned involved, I have agreed a price of 200,000. Ned, who is a UK resident, will sign the claim for capital gain tax gift. Now that is a trigger. That trigger says that what is a kind of relief given in the question. That is basically an holdover relief or gift relief. Now, in the topic of gift relief, if you can recall, if you have go through the topic of CGT reliefs in individual case, you can recall that what are the conditions for gift relief. Gift relief is available when you gift any kind of asset to anyone else, or gift relief is also available at in the case of sale at undervalue. So is this example falls in this category? Any idea? I am playing with the information, right? I am just telling you guys that how to play with the information, how to highlight important points, and then reconnect that points with my theoretical knowledge, and then see whether I have to explain, I have to calculate. If I have to calculate, I just need to calculate, no need to explain. Okay. So this is basically a kind of gift relief. Okay. So in case of gift relief, sale at undervalue, some of the tax you have to pay and some of the tax you can defer, right? Now, before moving to solve this question, let's see other information as well, because sometimes the question is connected with other information as well. Okay. Especially this joint venture type of thing. Now we have to calculate the CGT, right? So CGT format is very obvious. We have to use the market values, the sale proceed, the market values, and we have to connect relief as well. So let's see what kind of relief we can connect. Now see, there is some information here about P Limited. And there is also some information above. So first of all, let me complete that information and then I will solve this part. So joint venture with Q Limited. On 1st April 2002, I shall incorporate a new company, Q Limited. On that day, Q Limited will register for value added tax and begin to trade. It will develop a range of product over the next few years. The planned ownership of the ordinary share capital of Q Limited is as follows. P Limited, 60% shares. Either Mr. B or Mr. B's company, BJB Limited, 30%, CX Limited, 10%. So this is the ownership detail of Q Limited. Next information is about, I have calculated budgeted tax adjusted trading loss for the year ended. Q Limited's tax loss is there, 44,000. When calculating the loss, I deducted the whole of the cost of scientific research. So it means there is a case of R&D as well. Now remember, there are two things for R&D, whether it's small and medium enterprise or a large company. We have to see. So there is some scientific research information. Now, additional information about P Limited, because we are selling shares of P Limited. So I'm interested in P Limited shares. Meta owns the whole of the ordinary share capital of P Limited, which is an unquoted trading company, right? Meta began trading as an unincorporated business on 1st June 2014. Did you have an idea about the incorporation relief? I'm thinking about incorporation relief in this part. So on 1st April 2017, when the assets of the business were worth 1,20,000, she incorporate her business by selling all of the assets to P Limited in exchange for 10,000 ordinary shares. So it means there is an incorporation relief as well, right? An incorporation relief will reduce my gain. This sale resulted in chargeable gain of 37,400, all of which were relieved by incorporation relief. Look, incorporation relief has been given. That the chargeable gain which was incurred has been relieved by incorporation relief. Okay. Next, P Limited prepares accounts to 31st March. It does not own any asset other than those which are used in its trade. Now, another important thing. Here it has been written that she incorporated her business by selling all of the asset. Is there any other kind of relief which is connected? All of the asset has been disposed of. This is again a trigger point connected with another kind of relief. When you sell the whole business, part of the business, or cessation. No, it's not rollover. Rollover is what? When you sell and reinvest. It's not rollover. It is something else. Yes, it is BADR. And what is the impact of BADR? As we know that we have to calculate liability. So the impact is 10% of tax up to 1 million. Am I right? The gain up to 1 million is taxed at 10%. So we have to consider here 3 reliefs. Look, we have just 4 marks. So it's a basic question, but connecting with other kind of relief. So now we are in a position to solve this question. Let's see the information again. The market value is 2,60,000. The agreed price is 200,000. So we can adjust the relief information. But before moving on to that, let me just connect my theory notes of incorporation relief, and then we will start solving this part of the question. Just wait a moment. So that we can revise the concept. So meanwhile, let me recall few reliefs topics, few relief stuff. So can you see my slide here? Is it visible to you, all of you? Yes or no? Okay. Now see, the first one is business asset disposal relief. So here we can say that available when individual disposing of the business or part of the business, it covers first 1 million of the qualifying gain, and the qualifying gain is taxed at the rate of 10%, right? First thing. And now there is a condition that the whole or substantial part of the business by individual or partnership, the assets of the business that has been seized, the shares, provided the shares are in the individual personal trading company. An individual is an employee, whether it's a part-time employee or a full-time employee. Now, this is very important. If you want BADR to be applicable on this question, the condition must be satisfied. The asset must be owned prior to 1 year of disposal. The relief is not available on investment. Okay. So these are the conditions important. You should remember. And this is the time frame that relief must be claimed within 12 months of the end of the tax year of the 31st January. Means for the current tax year, the relief date is 31st January 2023. Okay. Now let me just discuss the incorporation relief, then I will solve that question. Another thing, the gift relief, sale at under value. Now see, incorporation relief. What is incorporation relief? Where an individual transfer their unincorporated business to a company. So in our example, this is the scenario. Meta has transferred to P Limited. Relief is available. How we can get relief? By deferring the gain until disposal of shares in the company. So this is a typical situation in our case. The operation of the relief, the total net chargeable gain arising on the deemed disposal of the individual assets are aggregated, gain deducted from the base cost of the shares, the gain deducted from the base cost of the shares. The relief is automatic provided certain conditions are satisfied. Okay. The condition is that the consideration has been received must be wholly or partially in the form of shares in the company. If the condition is satisfied, that I'm receiving consideration in the form of shares, so the total gain will be transferred, will be deferred, right? So no chargeable gain arises at the time of incorporation. And market value of shares acquired is market value of unincorporated business. This is the formula. Market value of unincorporated business minus deferred gain, right? So this is the condition where we have whole of the shares. Now I'm connecting this with my notes, with my question, and let's try to solve this question. Let's solve this on Excel sheet if it is available right now to me. Now, can you see my spreadsheet here? Okay. So we are disposing of 4,000 shares in P Limited, and we have to calculate capital gain tax liability, right? So capital gain tax liability. And now, as per the format, first of all, the market value is 2,60,000. Okay. The market value is 2,60,000 in the question. You can see. So market value is 2,60,000. Now we have to adjust the cost now. Okay. So let me check in the question that how many shares we are selling and what was the total number of shares that we get. We get 10,000 shares and now I'm selling 4,000 shares. Okay. So I need to adjust the cost. So I have to deduct the cost. So less cost. How I'll calculate cost? Market value of the business asset at the time of incorporation. Now let me just use the second column. So this is the market value given in the question. Market value of asset sold to P Limited, and that is 1,20,000. On that, we get incorporation relief, and that was given in the question 37,400. So I have to deduct 37,400. Okay. So in this way, I will get the amount that is 82,600. So this is my calculation. Okay. Now, as we are selling only 4,000 shares, so I need to work out how much to be how much to be apportioned. It is 4 out of 10. So it is like 4,000 out of 10,000. So this is the value we need to deduct. Let's put a minus sign here. So this is the value. So this is actually the cost that has been attributed. Now total answer is this is the market value, this is the cost, and this is the gain. Now, as this is a sale at undervalue, so it means we have gift relief as well. And we have to calculate gift relief as well. So, but currently I don't know how much is the gift relief. So gift relief might be the balancing figure, okay? Gift relief is my balancing figure. So the rest is how much is the chargeable gain. So I need to calculate the chargeable gain and the difference would be gift relief. So if you can see in the question, in case of sale at undervalue, we need to find out the difference, that what is the selling price. The selling price is 200,000. The selling price is 200,000 and market value is 2,60,000. And cost attributed is 33,040. Okay. So as selling price is 200,000, so chargeable gain is above is equal to how much is the price given, 200,000 minus the cost attributed to shares. So that is the chargeable gain. And now relief is the balancing figure. In case of sale at undervalue, always remember that we calculate relief as the balancing figure. Okay, so what would be my balancing figure? The balancing figure is this one minus this one. So 60,000 is the balancing figure. Let me highlight it. So it is not a simple calculation. First, I have incorporated incorporation relief. Then I have attributed the cost. Then I find out the gift relief. The question requirement is that you have to calculate CGT. Now, as we know that the asset has been disposed of, right? So in the case BADR is eligible and the rate of BADR is 10%. So let's apply 10% on this. So 0.10, this is 16696. So in a small part question, there are three kind of issues. Incorporation relief has been given. Gift relief we have calculated by identifying the balancing figure. Because why I have calculated this as a balancing figure? Because sale at undervalue. Whenever you will face sale at undervalue, there is an element of gift relief. Partial is the gift relief and the remainder is the chargeable gain. And that chargeable gain we have to calculate, which is the difference between selling price minus cost usually. Okay. Even if you can solve the basic example, you know how to calculate this gift relief. Now let's move to another part. The next part of the question says that it is related with Q limited. Q limited. Q limited will be a small enterprise for the purpose of the additional tax relief available for expenditure on R&D. Remember, in case of corporation, this R&D is very important topic, highly examinable. You can just list it down that it is a highly examinable topic. I have already established that the research to be carried out by Q will qualify for this relief. Q Limited will not surrender any part of the loss in return of a cash refund from HM revenue and custom. So we have to look for the research cost, right? So this is the relevant portion. I have calculated budgeted tax adjusted loss for the year ended March to be 44,000. This is the situation of loss. Now, for the small and medium enterprise, you know, the qualifying expenditure. How much is the relief? Can anyone tell me? How much is the relief on qualifying expenditure? What is the percentage? 100%, 200%, 130% extra relief on qualifying expenditure. What is the correct percentage? 100, 200, 130. Any idea? The correct answer is additional 130. Okay. 130 is the additional. So aggregate the qualifying expenditure plus 130, that becomes 230. Okay. So when calculating the loss, I deduct the whole of the cost attributed to scientific research, which is 1,02,000. I also deduct 1,000 in respect of the brand, as it will be amortized over a period of 35. So there are two issues. One is the scientific research cost, other is the intangible asset. So note number one, the cost is 1,02,000. But as you know that all of the cost is not eligible, right? So we have to identify what component of scientific research cost is eligible here. So first of all, equipment and computer hardware, is that eligible? This is basically a capital expenditure. On capital expenditure, we can get the capital allowance, but not considered to be a qualifying expenditure. Material, this is allowable. Rent, this is considered electricity and water. Staff cost, also to be considered as an allowable cost. The rent is an apportionment, is an appropriate allocation of the rent payable to Q Limited premises for this year. All of the staff cost relates to employees of Q Limited with the exception of 7,000 paid to an external contractor provided by an unconnected company. So we need to find out the qualifying expenditure first, right? But if you know the rule, you can write the theory and you will get the marks. Okay. Now, which one is not allowed? How much is allowed? The capital expenditure is not allowed. The rental cost is not allowed. The staff cost. Out of this staff cost, the amount paid to agency, 65% is allowed. So 35% we have to eliminate, right? Now let me calculate here qualifying expenditure. So total expenditure is 1,02,000. Deduct which is not allowed. Equipment which is capital in nature, 27500. Rent 17,500, 400. Electricity, water 100% allowed. Staff cost, how much disallowed? So we need to calculate that 29,500 include this 7,000, okay? And this 7,000, 35% is disallowed. So how much 35%? 35% is 2,450. Can you calculate the amount that is allowed as a qualifying expenditure? First of all, deduct this amount. How much is the value? This is qualifying expenditure. And then you will take additional 130% of that. How much is the value? That is 54650. Am I right? So 54650 into 130%. That is my excess amount, correct? 71045. This is my excess. In addition to that, so 1,02,000 is allowed plus 71045. So what is the total amount that is deductible? 173045. Is that clear? Is my working is clear to you? You can also show this working while writing or explanation of this part in the same word processing document, or you can show it in Excel and give the reference as well. Is that clear? Now you can see here the requirement was explain the tax deduction. Remember the word. Explain the tax deduction which will be available to Q Limited in respect of scientific research costs to be incurred. So you need to explain. Now what you will explain? You will explain that this is a situation of a small and medium enterprise. Okay, let me use the word processing document as well so that you'll get an idea. Now, the word processing document, let me open it up. So this is the word processing document. Write the requirement. What is the requirement? It's part B. So we'll highlight part B. Okay. Scientific research cost treatment. Now you can explain here whatever text knowledge you have about this, you can explain. Okay. So the point that let me just write the points. First of all, write about capital expenditure, that it's not allowed as an additional qualifying expenditure, not a qualifying expenditure, right? Second thing is that you have to write about it's an a small and medium enterprise. So 130% is available against qualifying expenditure. Okay. Staff cost includes 7,000, only 65% is allowed. You can quote the reason. Okay. So total allowable expense is, now if you are using the Excel for calculation, see Excel working. Often students are confused in terms of how to integrate word processing with Excel, because it is easy to calculate in Excel rather than to calculate here. You have to prepare the table, or you can also show some calculation here, but easy to calculate in Excel. But it is a choice. You can show your calculation here like I did in that, so that you can also use here that total research cost is 10,000 like this. But better if you can use the Excel sheet. Is that point clear? That how to use the word processing document in explanation. I'm not explaining here, I'm just giving you points to explain. So write in paragraph form, just write lines against each point, and you will get the marks. So let's move to the question again. So we were on the first part. The second part of the question says that, again, explain the tax treatment of the proposed purchase of the brand, an intangible asset for 35,000. We have to show the tax treatment. So let's discuss what is the position of that particular brand name. Where is the brand name information? There was something which I missed. Okay, ignore number 2. Purchase of the brand name. That I have to explain in the second point. On 1st April, Q Limited will purchase the brand for 35,000. It's an intangible asset. Advice will then be required on how to develop this brand through the use of social media. It is intended that the company will purchase this advice from a company based outside EU in a country where the rate of VAT is 9%, rather than a standard rated supplier from a VAT registered supplier based in UK. So this information has nothing to do with this part. We just need to know other information. And it's here that I also deducted 1000 against the brand, as it will be amortized over a period of 35 years. Now, what is the correct treatment of the brand amortization? What is the correct tax treatment? It's a simple calculation, simple treatment. So let's use the next part. Now here, after this calculation, you can use the brand name treatment. Okay. So it's an intangible asset, number one. So amortization is allowed. 1000 is deducted from profit and loss, because accounting treatment is allowed, right? But an alternate treatment. Anyone knows that alternate treatment? What is an alternate treatment? If that is beneficial, we will use that alternate treatment. And what is that alternate treatment? The alternate treatment says that use the straight line basis at 4%. Very good. That is 0.04. And in this way, it is 1/400. So it's beneficial to elect. Okay. I'm just writing the bullets. Okay. I'm just writing the very bullet and very specific point. You have to just increase a bit, not X is writing. As I already told you, lots of time is required to handle these kind of question. So do not waste your time. Now let's move to, we have taken three parts. First one was the disposal of shares. Second one is the scientific research cost. Third one is the brand name. And now let's see what is the next thing. So B part, next requirement. Calculate. Now here is calculation. So which document I will use? Calculate the budget, tax adjusted trading loss, after considering into account the above explanation. So whatever explanation you have made, you can use the calculation of the budgeted profit and loss account. Okay. So again, how to integrate into my answer this information? So that was the third one. And I have to put one heading here, that is amendment of budgeted profit and loss. This is my heading. And in this heading, I will show the calculation. So see Excel working. You can show this. If no explanation is needed, just calculation, just you can write see Excel working. And in Excel now, what you can do, you have to solve here. So put a relevant heading here, amendment of budgeted profit. Did you get the idea how I'm working? Because a student usually asks that which document is to be used for the entire question. Should we use the word processing document? Should we use the spreadsheet? How to mix those things between? So examiner has no issue with that. But you have to label, you have to mention that this is, you have to check my Excel working. Or anything you feel better, because it's all about the presentation. If you can do anything else, if it is understandable, then it's fine. Now let's prepare the amendment budgeted profit and loss account. So trading loss given in the question is 44,000. Trading loss given in the question is 44,000, right? It's 44,000. Those who are joining me late right now, I am in middle of a question. So that's very difficult to just follow me, because we are connecting all the information. So you can use the recording later on. Now trading loss, and we need to adjust two items. Okay. The research cost. So we need to deduct the additional research cost. How much is the additional research cost? So in the question, let's see what was my additional research cost. We can see I have used the research calculation here. That additional research cost is 71045, right? Which is the 130%, 71045. So it's 71045. Then intangible asset additional amount, and that additional amount is 4,000. Okay. Now put a minus sign here, and minus 400, because it is an additional deductible expense. So altogether we have like the losses, and my losses has been increased. It's 115445. Okay. So this is the next part we have completed. Move further down, the Q limited requirement number 4. Explain. Now again, a theoretical point. How much of the amended loss will be available for use by P Limited? Now that is very important. So we need to identify the structure, okay, between P Limited and Q Limited, right? In the question, what we have to identify? The relationship between P and Q Limited. Now you can see here, this is the relevant information. The Q Limited is being acquired by P Limited up to what percentage? 60%. Can you figure out what topic we have to connect here? Can anyone figure out? Okay, fine. You have identified group relief. One of the student identified consortium. So for group relief, you can mention that if P Limited want to utilize this, the shares must be at least 75%. Okay. So in this case, the group relief is not available. So let me connect the Next topic is loss relief. Next point, which is, I guess, point number 4. It's loss relief. So for group loss relief group, at least 75% shares are needed, which is not possible here. What is an alternate? So alternate is consortium is possible, where how much share is needed for consortium? Because Q Limited is a consortium company. At least 5, but less than 75%. Okay. At least 5 and less than 75 between companies. So this is the relevant point. Then Q will be a consortium company. So in our case, okay. So if you can see the structure here, so either Mr. B or Mr. B company BJB Limited 10%. Okay. So P Limited and BJB can create. Okay. This is a possibility. So P Limited and BJB can be consortium members, right? So P Limited can use how much of the loss? Up to the percentage, right? Am I right? And what was the loss value? It's 115445. It's 115445. So you can identify the amount. How much is that amount? 69267. Am I right? 69267. Okay. So this is just a simple explanation of the loss relief. Any question up till now? I already told you at the beginning, this is a huge question. So in exam, you have to solve like a 25-mark question would need to be solved in 45 minutes, right? But not possible here because I'm explaining each and every point. I'm jumping from this, that, and there. So it's taking time, but you need to at least put 45 minutes of time. So try to do the easy marks first. If you find anything difficult, if you have no idea about any particular part, just skip that part. Do not waste time. Now let's move to the other part of the question again. One point is remaining in Q Limited, and that is explain the VAT implication of Q Limited purchasing advice from the overseas supplier rather than one based in UK. Again, a theory question. Again, you need to explain. So it is a basically question set from the overseas VAT advice. Now there are two things: whether it's a transaction between business to business and whether it's a transaction between a business to customer. If you can use your notes or book, you can see that very easy points. If it is a B2B, there is a story, different story. There is B2C, there is a different story. So we have to see where Q Limited is established because it's a B2B. And then Q Limited has to pay tax at the rate of 20%. and then reverse charge principle will be applicable. Okay, rate of VAT in the overseas country is not relevant. Input tax can be claimed in the same quarter. Okay, so there will be no VAT impact. Like whatever will you pay, you will get back. This is called the reverse charge procedure. So here you can VAT issue related to overseas service. This is the heading. Okay. I have started from B point. You can refer A point, that you can see my Excel working, then B point, explain, then C, then budgeted profit and loss account, then loss relief, and then finally the VAT. So what is my bullet points here? That it's a B2B, okay, and overseas business. So what is my place of supply? Place of supply is UK. Okay, so VAT of 20% is applicable. Reverse charge process, we can claim it as input tax. Okay, so effectively no VAT, that is offset with output and input, unless you're not able to claim your input tax back, right? So this is finally, we have completed the second requirement, that is worth 15 marks, comprises of 5 issues with some calculation, with some explanation pertaining to many issues in this question. Okay, what was the easy one? That was very easy to get the marks. Suppose you are in the real exam. So can you identify in 5 parts what was the easy one that you can solve in the exam? Obviously, I'm explaining here each and every point, making it easy for you. But if you were the student in the exam, what was the easy one? Because it's very important to locate the easy marks. If you are not able to locate the easy marks, very difficult situation. For me, the most easiest one is the brand calculation. Okay. The second thing is VAT calculation, VAT issue, the brand issue, the VAT issue. Okay. And this loss treatment might be a bit difficult for students, but brand issue is very simple. The research cost, because that has been asked various times by the examiner. So research cost is easy, brand issue is easy. And the third requirement is based on above 2. Okay. So if above 2 is right, third is always right. And the fifth one, that is the VAT related issue. Hopefully you'll get something from this question. Now, see the last requirement. Last requirement. So let's see the main requirement first. For R limited, 6 marks are available. What we have to do for R limited, first of all, see here, explain. Now, why? What is the requirement? Explain. So no need to calculate here anything. Why the profit of R are subject to UK corporate tax. Okay. And then C, calculate expected liability based on the information available. And the third thing is that discuss the advantages and disadvantages making an election to exempt the profit from its permanent establishment from UK tax. So it is an example of an international issue, might be an overseas issue. So you need to have a good grip on that as well. Permanent establishment issue. There are 3 points. 1 is calculation and 2 is theory. So let's see the relevant information here. And what is the relevant information? Here, acquisition of R Limited. On 1st May T Limited will purchase the whole of the ordinary share capital of R Limited. For the purpose of UK tax, R is resident in UK. R trades through a permanent establishment in the country of T. Now, R's budgeted taxable trading profit is related to T is 75,000. R Limited has no other source of income and is not expected to make any chargeable gain during the year. Once we are confident of the profitability of the permanent establishment in T, it is intended that R Limited will establish permanent establishment in 2 other countries. Now, this is something important that helped me in the explanation part. So issue is that I have a company which is UK resident, and that company trades through a permanent establishment in another country. Further information. R Limited has not made an election to exempt the profit of its overseas permanent establishment from UK. Now, you know that there are advantages or disadvantages of making this election. Very simple point. The rate of tax in country T is 14%. Other than that, the tax system in T is the same as in UK. So only difference for the corporation is we have 19% tax in UK and that is 14%. But there is no double tax treaty between the UK and T. So this is the whole information about a permanent establishment. Right? Now what we have to do? We have to discuss what was the first requirement. The first requirement says that explain why the profit of R Limited are subject to UK corporate tax. Can anyone tell me why R Limited profit is subject to UK corporation tax? As you know that if a company is UK resident, then the company has to pay tax on their worldwide income in UK. And a permanent establishment is not a separate legal entity, right? So R Limited is UK resident and trading through a permanent establishment, so they have to pay tax in UK. This is a simple explanation of the first part. Now, second part says that calculate expected UK corporate tax liability based on the information available. So how much is the profit? We need to see how much is the profit. So the profit is 75,000. Okay, 75,000 is the profit. So we need to apply UK corporate tax, and then we will get a double tax relief, unilateral double tax relief, which is 14%. So the net of effect is 19 in UK, 14 in the other country. So the net effect is 5%. So 75,000. Let me show it here. The 19% tax is in UK. The reason I told you why, and that is 14250, and there is a deduction against the unilateral relief, and that is 75,000.14, that is 10500. So the net effect is 3750. This is the calculation in the second part. Now, at the end, we have to simply identify advantages and disadvantages of making an election to exempt its profit from an overseas business. The first benefit that we can get is that we don't need to pay UK tax. Okay. If we are electing as an applying for an exemption, what benefit will we get immediately? A saving of 5% tax. Okay. But there will be then no relief available. That is a disadvantage. And one problem is that this election is irrevocable and would apply to all permanent establishments. So we are planning for 2 more, so that we need to be careful about that. Okay. So this is basically few advantages, that no tax has to be paid. There would be saving, and some problem that loss relief will not be available, and decision, that is the election, is applicable on all future permanent establishment. Right? So this is the completion of the question. So at the beginning, I have used the report. Kindly carefully read that report. And after that, just try to solve this particular question again. A very useful question with lots of information, and various areas have been completed in this question. Now, ask your question, please. If you have any question in mind, just ask. Yes, any question? Meanwhile, let me copy one of another question. Our next agenda would be like in the next session, I'm going to cover CGT of individual specifically, as well as IHT issues in the third session. That would be on Saturday, and the relevant time will be communicated to you meantime. And in the fourth day, then I'll discuss some income tax related issues. The agenda is to cover the main question from each topic. VAT we are covering in between, whatever VAT question. Okay, another very effective question, and it's again a very huge one, a section A type question. That is question number 1, always very huge. In the first session, I already told you that there are some topics which are very crucial, and you need to work on that. That CGT relief, always important. Note it down. Another topic, all kind of group. The 51% group, the 75% loss group, the 75% gain group, consortium, D group charge, CFC, winding up scenario, winding up liquidation, overseas issues of all kind of tax, whether it's VAT, IHT, any kind of issue, basis period with change of accounting date. Okay. Terminal loss relief, pension contribution, the personal pension scheme, the research and development cost. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 for today. Then I will add some more as well. These are the areas which you need to focus. Identify question on these particular areas. Try to practice on these topics. that might be repetitive in nature. Okay, might come in your real exam, maybe. Okay, now see this question, a very huge one, lots of information. Again, what is my way of solving this kind of question is to see the requirement first. Okay, prepare the meeting notes as requested by your manager. The following marks are available. Now you can see this is a section A first question. So 4 professional marks are here. Okay, now just read the requirement. How you can get these marks? Ability to follow your instruction, that is the requirement. Clarity of the explanation, calculation must be clear, the effectiveness with which the information is communicated, and the overall presentation. Now, the order is very important. If you are not able to identify, if you're not able to solve any part, but still the order must be there. Okay, if you're following the sequence, logical explanation, calculation, then you might get few marks. Because I have observed the script of the students very pathetic in terms of explanation and such kind of thing, but still they get 1 or 2, right? So if you follow a logical answer, the clear presentation, you can get few marks from this 4. Now see, first requirement is sale of shares. And you can see here indexation factors have been given. It means it's a sale of shares related to corporation R limited. So indexation, you should keep in your mind that indexation is something. And immediately you can see here, this indexation is irrelevant. Why? Why I'm not using this? There are some triggers, clues in the question you need to spot on. Because in case of corporation, the indexation has been fixed at 31st December 2017, right? So it's worth 12 marks. Next is about group relief. Another is rollover relief. And the next one is promotion of new product. Now see, this is the detailed requirement. Please prepare notes for us to use in a meeting which explain the following matters. Number 1, sale of shares. Number 2, the group relief. Number 3, the rollover relief. And number 4, promotion of new product. And what is the topic in that? The VAT implication. Okay. So as it is related to a group, so a group structure, you can see here, a group structure, there are some companies, so you might have to identify some gain group, some loss, the loss relief. If they are asking about rollover relief, so 75% gain group. How we can create 75% gain group? By acquiring shares in another company. Okay, how much? Direct subsidiary 75%, and in another subsidiary, that is indirect, effective at least 51% shares. Then we can combine the 75% group. Okay. So H Limited is having 100% shares in R, 80% in S, 80% in T, and 90% in this one. Okay. So it seems to be a complete 75% gain group. Now let's read the question. Your manager has sent you a memorandum in relation to the H10 Limited Group. Extract has been given. This is the memorandum. The background, we are advising Carol C, the Group Finance Director, on a number of matters. I have attached a schedule which set out much of the relevant information. C was only recently appointed as a director. She has had very little experience of practical tax since qualifying as an accountant. I have carried out a brief review of schedule and concluded it is mathematically correct, but that we cannot rely on its tax technical content. All 5 groups companies, now this is an important information. All 5 group companies are UK resident, which prepare accounts to 31st December. Accounting year is same. The companies are in UK. So sale of shares, my first requirement. H Limited acquired the whole of the ordinary share capital of R Limited, that is 100,000 shares at a cost of 8.9 million. Similarly, on 1st January 2021, S Limited owned 80% by H Limited, sold a commercial building. Who sold a commercial building? Commercial building has been sold by a subsidiary of H Limited to another subsidiary for 800,000, its market value. The group claimed exemption from stamp duty land tax in respect of the transaction. So first is the issue has been raised is stamp duty. S Limited had purchased the building at a cost of 3,30,000. So it's an intra-group transaction. What is the treatment of an intra-group transaction between a 75% group? Is anything we can get? Yes, no gain, no loss. And anything else against this no gain, no loss? Anything else? Yes, indexation. Anything else? There is another point. If that subsidiary left the group, then D group charge. Yes, D group charge. Always think how much or how many things are there with related to this information. Okay. Moving on. However, the result of R Limited for the year ended December are now expected to be significantly worse than originally budgeted, and an agreement was signed for H Limited to sell 60,000 shares for 10.3 million. It is planned that sale of these shares will take place in October 2021, although the sale could be delayed by up to 3 months if necessary. So the scenario is that H Limited acquired S Limited, S Limited and H Limited is also acquired R Limited. There's a transaction between two subsidiaries, and that is with no gain, no loss. But H Limited is planning to sell shares in R Limited. That is out of 100,000. How many shares? 60,000 out of 100,000. Okay. So let's use this first information, sale of shares. Now what I have to do? The errors and omission in part A of C's schedule together with any tax saving opportunities or other matters, including stamp duty tax, which are not addressed in part A of our schedule. Please include a corrected calculation of taxable gain on the sale on the assumption that it occurs on 1st October. What we have to do? We have to identify the errors and omission, the reliefs, the tax saving opportunities. We have to talk about stamp duty tax. Also, we have to calculate taxable gain as well. Take some time to think about this. From my brief review, I think there may be 3 or 4 issues which need to be brought to C's attention. Okay. So this is the schedule. We need to now see the schedule. Taxable gain on the sale of shares in R Limited. Look, sale proceed, right? Cost has been calculated as 60%. Indexation has been calculated 0.025. Let me check which is 0.025. 0.025. What is the mistake? Can you identify the mistake? The indexation factor has been taken as 0.025. Why? What is the mistake? Because you have to identify mistake. Why it's a mistake? The mistake is that it has been freezed after 31st December, right? So you have identified right that why we have to take this figure. So first error, okay? First mistake or first error I have located. Okay, easy marks, right? First error, easy marks. Moving forward. Will we get any substantial shareholding exemption here? Is that applicable here? So we have to see whether substantial shareholding exemption is available or not, and we have to discuss as well, because we are selling shares that is 60,000 out of 100,000, right? Next thing, chargeable gain is 4826,500. Rollover relief analyzed below. Rollover relief has been there, 1350. So budgeted results for the year ended December 2021. We have trading profit. S Limited is having 1,80,000 of loss. And accordingly, we have chargeable gain note number 1. This chargeable gain arised as a result of disposal of shares in R Limited. UFAR Limited is sold a building used in the business for 1.8 million. This resulted in a chargeable gain of 85,000. Okay. So this is the information. Now further, what we can find out, what other problem we can identify. Second thing is that the building that has been sold between the subsidiary, there will be a de-grouping charge. Okay. Initially, the building has been transferred at no gain, no loss. And R Limited is leaving the group now while still having the building. So as a result, we have to calculate the de-grouping charge against that. Okay. And now you should know how to calculate the de-grouping charge. So let's calculate de-grouping charge here while looking towards the information between these two companies. So you can see here the relevant information. The building market value is 800,000, right? The cost was 3,30,000. Okay. And in between, we have to find out the indexation as well. So let me calculate the de-grouping charge here. You should know all the conditions, why there is a de-grouping charge. When a subsidiary, which is part of 75% gain group, is leaving that group, in that situation, there might be a chance of the de-grouping charge. Okay. So in this example, the market value at that time was 800,000. Market value of building is 800,000. Okay. The original cost of the building was 3,30,000. Now, in between, these two transactions, we have to find out the relevant indexation factor. Okay. So the relevant indexation factor, you can see the transaction. The cost is 1st May 2002. Okay. And the building has been sold on 2021. So it means the relevant index factor we have to choose is till December 2017, that is 0.578. So indexation is 3,30,000 into 0.578. How much is the amount? Is that 190740? Add these two and deduct from what? The building. And that would be your D group charge. And that is 330 plus 190740. It's 520740. And out of 800,000, it's 740. It's 279260. That is my D grouping charge. Okay. So that I have to adjust in the main working. Another thing we have to see here, we have to see this rollover relief. The rollover relief has been given as 1350. Now, what are the conditions of rollover relief? Rollover relief is used where there is a disposal of shares and the investment again within a qualifying asset within a qualifying time frame. This rollover relief is also available in a group structure, right? When one company is selling and other company is purchasing. So we have to see this 1350, how this 1350, they have calculated this 1350. So you can see here, new factory to be used in carrying on the company's business, that is land, building, 7,80,000, machinery, 430,000, patents, 1,40,000. Total qualifying addition is 1350. So out of chargeable gain, they have deducted this rollover relief 1350. So we have to see whether this is possible or not. Is it possible to have a rollover relief? There is a disposal of shares, right? There is disposal of shares, and disposal of shares is not considered as a qualifying asset. It means no rollover relief is available. So the mistake is they have deducted rollover relief. This is basically not to be deducted. Okay, it's a chargeable gain. Plus the indexation is not up to the mark. Rollover relief is not there. Degrouping charge we have to adjust. So the requirement was the error and omission in part A of the schedule together with any tax saving opportunities or other matters, including stamp duty, which are not addressed, please include a corrected calculation on the assumption that it occurs on 1st October 2021. So correct calculation is needed. So after this explaining each point, now let me do some correct calculation. given now you can see the gain which has been given in the question. We have to see how much gain given in the question. The gain given in the question is 3,476,500. You can start from here. 3,457,600. This is the wrong figure. Okay. So we need to adjust. So first one is we need to adjust the degrouping charge. We need to adjust the indexation is wrong. Okay. The degrouping charge, the rollover relief. These three items we need to adjust. So first of all, the degroup charge, add these 279,260. The rollover relief, which we have deducted, not allowed to be deducted, 1350000. The indexed figure, that index figure was indexation allowance 133,500. That has reduced the gain. That's why I'm adding this. So this is the adjustment. Now calculate taxable gain. This is the correction. So how much is the answer? The answer is, the gain is 5,239,260. So this is the adjustment. Now the other matters we have to discuss. Error we have identified. Any opportunity type saving or other matters like stamp duty tax, which are not addressed. Correct calculation I have already completed. So two things you have to discuss in that. One is substantial shareholding exemption, whether it is available or not. And second thing is that the stamp duty tax. Remember that if there is any intra-group transaction between a 75% group, so there is no stamp duty tax. But like degrouping charge, if there is a subsidiaries leaving the group, then there will be the consequences of stamp duty tax. So we'll continue